Welcome to Subramani. This video has been triggered by the recent issue of Lenskart, and I was waiting for Lenskart to be listed. So it is listed more or less at the issue price. Maybe the price fell and then recovered. Whatever. I'm not getting into the listing price, but let us look at the players in case of an IPO. So first of all, many entrepreneurs start with their parents' money, own money, friends' money, etc. Do a startup and maybe one out of 1,000 or one out of 10,000, maybe one out of million, reach the IPO stage. So remember, the person that you are talking to is reasonably successful, has fantastic ability to do business or fantastic ability to rig the books, one of the two. And he's got funded on the way by many investment and merchant bankers. Not that they are very great in doing pricing, but then they've got private equity and all of that. Friends, relatives, private equity, all of them have participated. Somebody has participated at 1 rupee, somebody has participated at 10 rupees, somebody has participated at 10,000 rupees. So suddenly everybody needs an exit at some stage. People need an exit. Even if you're a employee of TCS or HDFC Bank and you got ESOP, you will want some exit. So similarly, here are people who have invested maybe 8 years back, 7 years back, 15 years back, whatever, and now they are expecting an exit. So now let us look at the players. First of all is the promoter, and along with the promoter are people who have invested. Sometimes the promoter is happy that he is making money, and sometimes he is very sad that these people who came in just 5 years ago or 3 years ago or 6 months ago are making so much money, but that he will not express it fairly obviously, at least till they get an exit. After that he'll say, I made so much money for them. So that's the promoter for you. These are the private equity investors. Now they have to make a lot of money in every issue, because a lot of their investments just don't get any results, right? They just can't get an exit. So in the companies in which they have invested and where they can get out, they want some 1:7 or 1:8 kind of a return, which means for every rupee invested they want 7 rupees, 8 rupees. That's what they want. What they will get is something different. So the interest of both these people are completely aligned. Now the promoter goes to a merchant banker and says, look, I want to do this IPO at rupees 100, 10 plus 90 premium. He looks at it and he says, wow, here is a good company, and I'm interested in doing this business, and this is the right size for me. So then they start negotiating fees. The best of companies would pay 1.5%, 2% kind of fees, but as you go down, the fees can go as high as 5-6%. Okay, don't jump at me, but what happens is, the most of the fees is to be paid after the IPO gets listed, right, at that stage. So honestly, the promoter also realizes in terms of cash flow, it does not matter too much as to what fees he agrees, because the merchant banker, investment banker, whatever you want to call him, is now telling him not 10 plus 90, but we can do the issue at 10 plus 190. So this man who thought he's going to raise, let's say 100 crores, suddenly realizes for the same number of shares, he's going to raise 200 crores. So instead of paying 2% of 100 crores, which would be 2 crore fees, he's being told that he should pay 12 crore fees, but the catch is he's getting 200 crores for what he thought, where he thought he would get 100 crores. Now, who is incentivized to say that no, you should come out with a price of only 10 plus 90? The greed of the promoter, greed of the private equity guy, and the fees of the merchant banker are perfectly aligned to do a highest price IPO. Now don't get sentimental about saying they will want to leave some money on the table for the retail investor. No, there is no great love or sympathy for the retail investor. In fact, it is getting worse. Once upon a time, an entrepreneur went to the market. He thought these shareholders are going to stay with him permanently. Today, very clearly, the initial investor is the promoter, and after that anybody who has come wants an exit. So they are very clearly not going to be there for the rest of their lives or your life. but chances are at any possible stage, if they're getting a very good return, I mean, if I put money in a private company and I'm getting 57% CAGR over 4 years, I would be insane not to cash it, right? So that's what people do. After that, they may regret. They say, "Oh, I sold Amazon so cheap. I sold Google so cheap, right? I sold HDFC Limited so cheap." All of that regret could be there, but initially, the pricing, everybody is aligned to charge a huge premium for the IPO or OFS, which is an offer for sale, and there is nobody to say that the price should come down. There is nobody at all. If the market can't bear, it will come down, right? If they're trying to price it at 200 rupees and the market does not accept it, now then starts the fun trip of the investment banker, merchant banker, who's making so much money, where he should be making 2, he's making 12. Gives him a lot of cushion to go to fund managers, analysts, and talk up the share, which is normally done, which is not very difficult, right? So there is such a shortage of allocation. It sounds very funny, but yeah, there's such a shortage of allocation. Go back to the Indian mind of shortage of cement, shortage of steel, shortage of scooters, shortage of cars. The mind works that way, saying, oh, if there could be an opening pop, then there is a grey market which will do the work, which will say 200 rupee share is quoting at 207, 214, 221, whatever. That will be quotes like that. Who in this whole thing is now interested in talking down the price? Nobody. Even the retail investor wants to buy it at 200, sell it at 210. He does not care a damn what that company does, right? Whether it is making crockery, whether it is making shoes, whether it is making structural products for construction, it does not really matter, right? He thinks he will be able to get it at 200 and he will be able to sell it at 207 because the grey market premium. Are bloggers like me interested in saying it is overpriced or it is underpriced or something? No, I have not been in the IPO market for a very, very long time, because the real good companies, you don't get allotment, and even if you get allotment, it is too small, it is insignificant. If I want, like say there was this company called Carraro, which came out with an issue at 700 rupees, I wouldn't have applied even if I thought the pricing was fair, right? So I did not apply, and then the same share was available at perhaps half the price. In fact, I have a formula saying if it is an OFS, very soon, very likely that it will be available at half the price. So, which happened even with something like ICICI Securities. So I said no OFS, I don't touch an OFS, and even in an IPO, I don't like to buy because I want the market to discover the price. Like, right, there should be enough number of buyers and sellers, so then it settles down at a particular price. At that price you can buy, right? So I would rather be a secondary market player than a primary market player. Is any blogger interested in saying, oh, Lenskart is overpriced, don't buy? No, not really. He has no incentive for doing that. In fact, he could be incentivized to write and say, oh, it's a very good price. I mean, if I am running this video and then somebody comes and says, I'll pay you 1 lakh, and you say this is a good issue, I actually have nothing to lose, right? What could I lose? Some little bit of credibility, and say, oh, but see, I did 4 issues and 3 opened at a premium. Then people say, oh, it must be a genuine mistake. They don't know. They don't know that I have been incentivized. So there is absolutely a total ecosystem working against the retail investor, and the retail investor continues to believe that there is a free lunch. Whose fault is this? The regulator says, read the offer document carefully. Very easy and absolutely impossible to read and complicated offer document, which there is no way how you will understand what has happened unless you are a trained lawyer, preferably a chartered accountant come lawyer who is in this business, right? Even a lawyer who is doing criminal law will struggle to understand and go through the prospectus, as it is called, and understand and do the pricing. Now with pricing, there is another problem, that you have to be God to be able to price anything perfectly. There is no reason why. I remember when Maruti came out with an issue, Maruti Suzuki, it was an offer for sale, and people said it was terribly overpriced. I think it was priced at 125, and then I watched it go up to 1,250 almost very quickly. So there is nothing to say that the share is overpriced or underpriced. The market decides. Like Reliance Power came out with an issue at 400, and I remember telling one of the TV channels that I'll buy it only at 75 rupees. When it actually came to 75, I thought it was overpriced. I did not participate, but I'm just giving you numbers. Didn't make any sense to buy Reliance Power at that price. But I I may have missed out many good IPOs also. I'm not there in the IPO market because I think pricing is a joke. The people who are selling are extremely smart, very successful, MBAs, sometimes even investment bankers and merchant bankers who have promoted some company. So the odds of a retail investor making money in an OFS or an IPO is likely to be almost impossible. So right, so you can't make money. Understand, the promoter wants the highest price. He goes to a merchant banker who is his agent. He's not here to protect you, right? The regulator is very clear. Unlike the CCI days where he chose this is the price at which it will sell. He's saying if you're a loss-making company, you can come out with an IPO. If you're a profit-making company, you can come out with an IPO. So there is nobody saying reducing the price makes sense unless somebody who can go short. In India, you can't go short in an IPO, right? Anyway, you can't go short in an IPO. Even as soon as it lists, you won't get enough shares for you to be able to go short. So now with long short funds, maybe somebody will be incentivized to hit the price down. But other than that, there is nobody willing to talk the price down or anything. It is so. I mean, you can contrast this to foreign markets, it doesn't really matter, but in India, there is no incentive to hit the price down. There is no skin in the game for the banker, there is no skin in the game for the private equity investor, there is skin in the game only for the promoter. But maybe 50% of the promoters, yes, they want to come back with another company, do an IPO, etc. But that is a very small percentage. Now then you take very good companies, take something from the Tata Group or JSW or Murugappa Group. They have not come out with an IPO for a very, very long time. The last IPO from the Tata Group must have been TCS. Now that is more than a decade old. So who is really coming out with an IPO? Anybody who is saying, okay, I have a short-term relationship with this guy, so let me take it and run. I remember one chairman saying, no, I think we have overcharged the premium, so let us pay a higher dividend. These people are now dead, right? So even in that group where the chairman made this statement, he's not in power, he has died, his kids will not subscribe to this issue, to this thought process, right? So the odds are against you. Now look at the analyst and the fund manager. Now I am running a 30,000 crore fund. An IPO does not interest me because that small pop that I am going to get 20 crores worth of shares, which might open at 21 crores. That 1 crore does not really do anything to my 30,000 crore AUM. But if I am a small fund manager with about 100 crores got in an OFS or what some put in by the promoter or things like that, I'm running a 100 crore fund. In a 100 crore fund and I'm sitting on 30 crore, 40 crore cash and not yet deployed it, which is a very high percentage. I don't mind putting 40 crores in an IPO where I will get maybe a 4 crore kind of an allotment, which might open at say 5 crore. Now that's a big amount because there's 1 crore on 100 crore, that is 1%. So my NAV goes up by 1%. I have a huge incentive to put it there and then hope that when it opens, I sell it. I'm just putting it for the opening pop. So I'm not an anchor investor. I don't have a 6-month lock-in, nothing of that sort, right? So there is a huge incentive for a small fund to put it there. So if it suits him, or if he's a pharma fund, he obviously can't put in a cruise company or in a bank, but he can put it in similar related stuff. But if he's a flexi cap or something, he can really, it's an open world, right? You can put it wherever you want. So everybody is incentivized to sell it at a higher price, except the retail investor. And even the retail investor is not investing because he has read the prospectus. He is investing because somebody in the grey market has told him 200 will open at 207. That's all. So in this market, if somebody makes money in an IPO, all the best. I don't have a model by which I will make money, so I will stay away. Thank you.